All right, we're live.
What what is up, Bitcoiners? I am here with another awesome panel here for Bitcoin Magazine Happy Hour. We have a veteran crew of miners here on the show today. Pretty much everyone here has been here on the show before. We have one new person, Young from SBI. So welcome to Bitcoin Happy Hour. My name is CK. I am the host. My job is to make sure the conversation flows and as well as the drink. And I'm going to pass it off over to my co-host, Bran, on the right.
What is up, everybody? Holy cow! What a week! What a week! This is, we all saw it coming, but it still feels good to be here. So I'm excited to talk to everyone, get the take from the industry, and lay back and chat for a while.
All right, well, let's get started with some introductions. Let's start off with our first Ed. Let's go to Edward below me. What is up? Why don't you introduce yourself and tell our audience what you do in the mining space?
I think that's you, Eddie.
Oh, is this? Oh, I thought. Sorry, I'm on
No,
a
you're
different.
Edward, man. You're Edward.
I
He's
was yeah. I
Eddie.
heard Edward. I'm like I'm Eddie.
Okay, I'm to the right of you on my screen. I'm Edward. I am the head of business development over at Brain Slush Pool. Um, as many of you probably know, Slush Pool was the first Bitcoin mining pool established back in 2010, and we've mined about 1.3 million BTC so far since then, or rather helped miners mine that. And we have some multiple projects, firmware, Stratum V2 open source upgrade to Stratum V1, which we made. BrainsOS Plus and BrainsOS open source is the firmware. Slush Pool is the pool. We have some other projects in the work, and I think that about covers it.
Awesome. Well, thank you for staying up late for the show, and congrats again on 10 years for Slush Pool. That was earlier
Yeah, thank
this
you.
week, so that's a pretty awesome achievement for the oldest pool in Bitcoin. Let's jump over to Young. Welcome to the show. Young is from SBI, the general manager. Why don't you introduce yourself to the audience?
Yes, hi. Thanks for inviting me to this event. Uh, SBI is a bank in Japan, and there are many subsidiary companies. We belong to one of those, and so SBI has always been very progressive in the crypto space. So invest in a lot of companies. Probably one of the largest investors overall for everything crypto. So we also are pretty vertically integrated from mining equipment to mining to the Bitcoin exchanges to financing. So a lot of interesting things. So what we are doing here is more on the mining equipment and mining space. So we have some mining happening in US and other places around the world, and we are also making some mining chips as well.
Awesome. Well, excited to get your take on everything that's happening in the mining space. We're going to be talking about this past year as well as expectations for next year. So all of these experts are going to be giving us a wide variety of expertise and knowledge. Let's jump over to Eddie Wang from Luxor. Welcome to the show. And
Thanks.
actually, I think this is your first time on the show as well. Pretty much
It
everyone from
is.
your team has been, but welcome to the show for the first time.
Thank you very much. Yeah, I'm Eddie too. I work at Luxor. We're a small mining pool based in Seattle. We mine 10 different currencies, one of them obviously being Bitcoin. And yeah, we serve miners, try to, make mining easier for them, try to provide them with the insights and data they need to maximize the value of their hash rate.
Awesome. And you guys are doing some cool stuff on the analytics side as well as the kind of hash rate exchange side of things too. So very exciting things coming out of Luxor. Let's jump over to Denver Bitcoins. Welcome back to the show, man.
Hey, what's up, CK? Happy to be here. Yeah, I'm Denver Bitcoin. I'm a founding partner at a company called Stranded Energy Investments, and we invest in bringing stranded energy to market by converting it to computational work and mining the Bitcoin network. So mining is something I've been doing for a little while now, and took as a serious investment, raised some capital, and happy to be here with these mines. So thanks, guys.
Awesome. And last but not least, let's jump over to Drew. Welcome back to the show, man. Great to have you back on.
What's up, guys? This is actually my first time on. I often get confused with my twin, AJ Scalia. But yeah, I work with Amanda Fabiano over at Galaxy Digital on the mining team. But yeah, great to be here. Thanks for having me, guys.
That was my bad.
No worries. It's been happening for many years now, so no sweat.
Awesome. Well, AJ brought it, and I'm sure you will too. Lastly, Marty Bent messaged me saying that he's trying to get his show out, so he will be jumping onto the stream soon. So have no fear, y'all watching out there. Marty will be joining too. But yeah, guys, we are sitting here. Bitcoin is flirting with $23,000. It seemed like, it really sliced through 20,000 like it was nothing. What a time to be alive. What a time to be bullish. How are you all feeling about this price? Let's jump over to you, Drew.
Yeah, I mean, it's unfortunate that the days of 10K Bitcoin seem to be over. Definitely wish I had more. But yeah, it's the perfect storm for Bitcoin right now. I feel like everyone's kind of waking up to just the sort of monetary abundance that we live in. And I could not be more bullish on Bitcoin looking out for the next couple of years.
That seems to be everyone's prediction here. Was anyone surprised by how quickly we kind of smashed through 21 and 22?
I was more surprised by the lack of growth in hash rate from 11,000 to where we are today, right? I mean, I understand that the rainy season ended in China, so there was some power hikes in price, and so we saw a dip. But everything I projected, I thought we would start to see pretty crazy increase in hash rate as we crossed $15,000. That just seemed, I expected it, and we're kind of we're still under all-time high, sitting at 130 exahashes, something like that. So I'll say I was pleasantly surprised by that.
Who else wants to add on to that? Who is surprised by how low hash rate, and is that something that's gonna be a trend for the next year or so?
I don't know how surprised I was by it, but I think that'll definitely be remedied by pretty quickly after the new year. Right, we've had a bunch of reports come out about numerous companies buying pretty massive quantities of the newest generation of Bitmain Antminers, like S19s, S19 Pros, as well as the newest WhatsMiner models, as well as, at least in my experience, a lot more reports of people willing to go for the dollars per terahash option over efficiency. So willing to buy some older models in order to get the hash rate up and running. This is primarily, I guess more Denver Bitcoin's side of the industry, like oil and gas, because they have the luxury of that super cheap electricity that everyone's envious of. Yeah, I think this is kind of the calm before the storm in hash rate. I think probably midway through January, and then after that, we'll start seeing a pretty sharp climb once people get back from the general holidays.
Yeah, from where we're seeing, I think I do agree the hash rate will continue to go up. However, I think the ramp could potentially be quite limited, mainly because there's just not enough capacity available at the foundries, both at Samsung as well as at TSMC. And that is unlikely to change for the next year and a half. That's our prediction. So in the meantime, since the Bitcoin price has gone up so quickly, I suspect a lot of the older generations of the miners will be brought back to life. So I know someone are restarting the S9s.
The zombie S9s. I call them zombies. They keep coming back. I remember last year people were just throwing them in piles. It was pretty much trash, $20 a piece. And now I think the price for them is quite high now again. And there's a use for them. So it's
Although,
I think I'm beating myself up more about that than not buying enough Bitcoin. Was just like, why didn't I just scoop up all the S9s I could at $20 and start mining?
right?
Yeah.
Yeah.
That would have been a good move. Yeah, I
Although-
didn't know the price is going to go up this quickly. So if you think about for everything mining, I think this is the best time. It's Bitcoin price is up, but the hash rate couldn't catch up. So this is probably the most profitable moment to mine.
Yeah, that's interesting what you said there, Yang, about about the foundries and the chip capacity, because even more so than access to new hardware, I think kind of like what you said, Edward. I think there's a lot more people that are seeking out wasted energy or energy as a service, right? Where consumption of particular energy actually provides value to a counterparty. So, I think at the same time, S9s are coming back to life. One, because price is more agreeable, but two, people are finding really cheap power, right? They're investing in the infrastructure because they understand they can bring it to market now. And so I think S9s are going to be around even for a while, because if your power's free, if your power's a problem, you mine with V9s. For all intents and purpose. So
yeah, I totally agree with Denver Bitcoin over there. I think if you have free power and if you're one of sort of the flared gas service providers, it's just a question of how long the actual hardware itself can run. But yeah, I don't know. I still can't really see sort of the ASIC supply being able to, if this really is the bull run that at least I think it's going to be. I struggle to see how ASIC supply really catches up. And to Denver Bitcoin's original point, us just blowing through 11 through 23 now, the fact that we haven't seen a ton of sustained hash rate come online, and it just seems to have been kind of hovering around 130, 135 for these past couple weeks. You would think that any sort of capacity on standby that people had miners but were just waiting to plug in, you would think that now we'd be seeing them all get plugged in, since we're above 15 cents per terahash per day in revenue now. But yeah, it seems like maybe it's
almost 18 cents now, right?
Yeah. It's 19, I think.
Yeah, so it's interesting that we haven't at least seen something. Maybe we have, but there's been some kind of a counterparty that's shutting them off. I can't imagine turning my miners off right now, but I have a hard time explaining it. Maybe people are just waiting for their S19 Pros to deliver, and they're not plugging anything else.
I think a factor has to do with secondary markets too, right? With these ASIC prices, when they rise so much, sometimes it makes sense from a business standpoint to just unrack them and sell them, because you're gonna make money per device, and then while these machines go through customs and then they need to be set up again, that's where that will be.
Also, I know there's some facilities that have just run out of shelf space. The only time they unplug the existing miners is when the new shipments come in. And it's interesting too, because there's different dynamics in the industry. That at one point Hashrate is kind of stalled despite it being much more profitable to mine. And on the other end, there's a ton of hosting facilities that haven't filled up their shelves yet either and are looking for more clients. There's almost an oversaturation of these hosting data centers on the market, and they're always looking for customers. So I think it's pretty primed when the new machines come out to kind of fill those shelves. And that's why I think it'll rise pretty sharply. Not to mention just the sheer hash rate output of a single machine now when talking about the latest generation. And I think we all saw today what Core Scientific ordered another 58,000 S19s, which is, I don't know what the math is on that.
Well, even beyond the when you say shelf space, are you referring to their power capacity, right? What the amount of power that they have access to?
Yeah, exactly. How many miners they can turn on?
Yeah, so then it also begs the question: hey, their marginal increase on hash rate, considering they're going to have to unplug in order to plug in these new generation miners, isn't going to be equivalent to the the sum of the nominal amount of 58,000 S19 Pros. So if they're already mining, there will be an increase, obviously, but it'll still be marginal.
you'd think that then that other sort of hash rate that's coming offline, like those other machines, would then, yeah, you would assume the invisible hand would find them at home with some really cheap power somewhere else.
Exactly.
But it
Yeah, it
is
would be temporary.
crazy. Yeah, Ed, to your point, if you assume that like those 58,000 machines are all incremental, that's like 6 exahash on the network. So that's it's pretty insane, the size of some of these orders that are getting published.
From a single client, no less. Yeah.
Well, if anyone is looking to offload a miner or two, I'll split the revenue 50-50. My house is kind of cold, so just hit me up.
You know, Grant, I would have taken you up on that before the winter, but now I got these apartment S9s plugged in with my 30 cent per kilowatt hour electricity, so it's a pretty profitable operation over here.
Hey, I've done it too, man. I did the exact same thing. I even bought I even spent more money having AC tubing in order to direct the air and airflow and try to heat my house. So yeah, I think we're
Daniel from the Slush Pool team says that it's 0.09 kilowatts per hour right now. Wait, so you can auto tune an S9 right now to get 0.09 kilowatts per hour.
Oh, I think he's talking about the break-even. I see that comment. It's the break-even electricity price. So long as your electricity cost is under 9 cents per kilowatt hour, then you can mine S9s profitably.
That is pretty insane. If you
That's
think
insane.
About it, a while ago, it was really just if you have more than 5 or 6 cents, you're well, it's not interesting. But now it's like even at 9 cents with S9, that's profitable. That's just crazy. And I imagine it's going to last too long though.
It would beg. I mean, why hasn't the hash rate skyrocketed?
Well, it's because the existing machines have to geographically move and find new homes that can house them with the right energy costs. But I've been I'm not a miner, but I've just been kind of viewing this from the outside looking in. But it's amazing to me how the Bitcoin network doesn't waste, right? Think about planned obsolescence in all of our technology. And then here's the Bitcoin network. And I feel like everyone is expecting these S9s to become irrelevant. But no, if anything, they're the most relevant aspect of the market because they're kind of that sea of hash that, we don't know when and where it's going to get plugged in. So it's just very interesting to see that kind of dynamic with the network.
Yeah, I mean, it's kind of just like a CapEx, OpEx trade-off, right? So S9s are probably as low of CapEx per terahash as you can get. And so if you're Denver Bitcoin and someone's paying you to take their natural gas or their flared gas, S9s make sense forever.
Well, yeah, and I think there also is, there are some economic decisions to make within that, right? At the same time, in order for me to generate more power, I have to build more infrastructure, right? So I have to purchase more housing units, I have to purchase more gen sets. So there is an aspect of, hey, once I have particular infrastructure set up, if I want to increase my hash rate, is it cheaper to just buy newer machines or should I build more infrastructure, right? And so there is kind of an added cost to expanding that maybe some people wouldn't calculate, but I think generally you're right. It ends up being that building another engine and putting S9s ends up being a winning strategy per dollar. So I think S9s are going to be around at least probably until the next halving, but yeah.
If I can ask Denver, what if, say, I don't know, it's a couple years from now, a lot of S9s start breaking down theoretically. You have to basically upgrade. S9s are no longer the go-to choice. What's your next miner going to be after the S9 to replace them with for your particular operations?
That's a good question. I think it's going to depend upon some things, right? It depends on the network, on the price. So I kind of think about those things, but I've already upgraded some, and I used some InnoSilicon T3s, and then I think I'd probably look at the WhatsMiner, the M32, the one that's not very efficient but still has got a high nominal hash rate. That would probably be my next. Yeah, I go to secondary market, of course. I don't think I would jump all the way to S19 Pro kind of next gen, just because I think they're overpriced for what I'm doing. So yeah, but
the ROI period on those are insane, right?
mean, maybe even S minor or ant minor T15s, I think wouldn't be a horrible thing. And you can find those relatively cheap out there. So, it wouldn't be next gen. I'll say that.
Yang, so just to kind of pivot the conversation slightly, like, SBI is in the game of actually, fabricating chips and making miners. Like, what's on the agenda in terms of moving forward with, the next gen of what you guys are building?
I think yeah, unfortunately, that part is still rather under the wraps for now. So we're.
I knew that was coming, Yon. I knew that was coming.
You can see that from a mile away.
Yeah, but in general, we do a combination of things. So we buy probably maybe hundreds of thousands of miners, maybe a little bit less. I don't know the specific amounts each year from others as well. So that all depends on number one, we have different units, and number two is it just depends on the availability and the convenience at the moment. So so I think right now I predict from all the major suppliers the systems will be rather in tight supply. So if you were to order something, it probably won't come until quite a bit later, probably 6 months later. So I think that delay right now, if you have the miners, this is the sweetest time. And if we can get our hands on miners, that's what we would do as well.
So one thing that I kind of gather from that is, and I'd love everyone's kind of take on this. Eddie, we haven't heard from you in a little bit, but say I'm a investor, legacy finance guy getting into Bitcoin, and I'm like, oh, I can tell already that I'm going to make money just by mining Bitcoin. It sounds to me like that person is set up to, not be even mining a single Bitcoin until June of next year. I mean, what does that timeline look like? Where do we see, newfangled competitors coming onto the market?
I think there's aspects to it, like definitely the machine and just like the supply of the machines coming and getting it manufacturers is a big one. But like Denver said, there's other aspects of actually building out that infrastructure and making sure that you have the PDUs and everything, and you have the ability to set these machines up before you can actually utilize the hash rate. For somebody looking to invest in this space, I think the way I would approach it is if you don't have experience, and this is a really important thing, if you don't have an experience being a miner, like partner with people who have done this for the past few cycles. Like, smart mining farms right now are preparing their war chests because another bear cycle is going to happen. If not this year, the next year, or if not next year, the next. And when you're in a bear cycle, the metrics are a lot different for these mining farms, right? And they need to be able to operate. Sometimes they're not making money for months at a time, and they're losing and bleeding. And if you're not efficient, then you're going to blow up. And I think so. Like if you're an investor looking to invest in a mining operation, look at their history of like how they've approached Bitcoin mining. And at the end of the day, the goal is to accumulate as much Bitcoin on the balance sheet as possible. So, if you look at the equities markets right now, it's great because most of the valuation metrics, I would say, are revenue based, right? And people are gonna, they're gonna be willing to pay a premium on these machines because it's, they can kind of look, we're mining more Bitcoin now, but once the bear market hits, it's gonna go back to profit, and it's gonna go back to how efficient you are. What's your cost of power? So that's how I think I would approach it. Take a look at who's participated in the markets long enough and have kind of like a history of being able to weather through the bear markets.
Yeah, I think I agree. I think if there's some investor, let's say, without any experience in setting up and running mining farms, I think there are a lot of, I think there's definitely a learning curve there. Probably the better, safer way to do that kind of investment is to partner with someone who actually already knows, so that you don't have to have that delay. Because in the Bitcoin mining world, it is really, the time is quite important. So if you go through a couple of trips and falls, then you may not have the you may already have missed the opportunity. So it's just easier to partner, I think.
Yeah, and even assuming that you are competent, like you can sort of miraculously manage to like run a mine yourself without any sort of experience. I think both Leo Zhang at Anicha and Ethan Vera have done some like research recently, kind of showing how sensitive the entry hardware price, how entry returns are to entry hardware price. Like Ethan did some research showing if you had bought an S9 at various different points in time, your profitability and your returns are just drastically different. So yeah, although I think Eddie, I think you're a little more bearish than I am because I feel like if say maybe this is like too much of an oversimplification. Maybe this is like a big point of disagreement. But say we just passed all-time high. Say we hit the new all-time high, whatever that is, in about a year from now. Looking kind of at how Hashrate responded in 2017, it seemed like even at sort of the next all-time high, Hashrate was still sort of racing to catch up. And it seems to me that if you were to invest now, you're not really at the risk of say like a mining bear cycle in the next like 12 months, or maybe it would be in like 24 months. So I think the question kind of just becomes like build out time. And you could buy machines today if you wanted to. It's just going to be at a higher price. So I mean, it all depends on hardware pricing, but
yeah, and I think you point out something like hash rate and just generally like the infrastructure, it's going to lag the price of Bitcoin. So now that Bitcoin's really high, in a few months, like Edward said, we expect to see hash rate basically come up, right? Because at the end of the day, this is a zero-sum game. And I think the reason I'm so bearish is because the backstory, like we've tried to run a mining farm ourselves, and kind of we've been boots on the ground, and we've seen how some of these mining farmers operate. And at the end of the day, like in a bear market, what ends up happening is like the inefficient players just kind of get bled out of the game. And the efficient ones generally are able to stay on longer. And also it's, a factor of many other things. But data is a big one now that I think changed since 2017. We at Luxor, built shameless plug, but like Hashrate Index try to like open up some of the opaqueness of the mining industry and try to like offer some data for people to hopefully leverage and use to better model out what risks and scenarios might happen given if the price of Bitcoin goes up or down, or if hash rate goes up or down. But there's like so many different factors, but I think all of them at the end of the day is the price of Bitcoin, as much as we want to say this. And another thing I think that is changing is we talk about 5 nanometers or 7 nanometers, 12 nanometers. As we get closer to, I guess, the limitations, because Moore's law is dead, what efficiency matters even more at that point, because now these machines are on much longer cycles. And so at that point, it's really about how lean you are as an operation and how effective you are able to extract the value of that hash rate.
Yeah, see, I have to disagree because, I think the efficiency in chip production, right, and hashing is going to come after the efficiency in sourcing power, right? I think there's just less obstacles to sourcing really cheap power, because from our, my perspective, the price of Bitcoin doesn't really matter, right? Because I'm solving a problem, right? I'm consuming energy that costs somebody money. So, and I think there's going to be a shift and a movement toward that because that is the leanest power source. And at that point, that's why I think the efficiency of the chip isn't going to be that dying value add, that real competitive advantage. The competitive advantage is going to be that free power source. So
in your example, and I think you make a great point, you would, I guess, rely less on, the operating expenses per se, but you still have to decide, when to purchase those machines, right? Which model to purchase. So I guess, efficiency maybe not in the operating sense, but in the decision-making sense, being able to efficiently allocate your capital to ensure you're, not losing money. Because like, for example, if you're buying a bunch of S19s now for your operation, that just doesn't make a lot of sense for you. And I think those kinds of decision making is where the winners and losers will play out.
Right, kind of what we spoke about in the beginning, which was dollar per terahash, right? That's
right.
Kind of the is more the ratio that I'm paying attention to, because the consumption isn't as important, right? The energy consumption.
So guys, I want to jump in here. I want to jump in here and I want to zoom out and I want to ask each of the panelists, if there was one lesson that you learned from 2020 about Bitcoin mining, and maybe it was your personal lesson or maybe it was an industry lesson, I want to kind of get a little bit of like reflection on what have we learned, what have you learned about Bitcoin mining from this year. I mean, anyone eager to jump in with that? I don't want to put anyone on the spot.
Edward.
All right, Edward. Brand put you on the spot.
It's kind of like everything moves so fast in this industry, right? That's what I was about to say. Like, I would caution against a comparison between 2017 and now, just because it's a completely different world. But as far as the things I've learned in the last year, it's what are some things? I would just say that I think one of the highlights I took from this last year is that kind of just what I just said then, was that it's a completely different ball game now. There's a lot of different participants in the space. It's no longer these fringe actors that are these, enigmatic Bitcoin miners that no one really knows anything about. It's kind of opened up, and as much as people say Bitcoin mining is super opaque, it's become much more transparent in the last year, and the actors are much more public than they were before, and it's in the headlines now, and you know exactly who's buying machines, how many machines they're buying, where they're setting up their facility, what type of power they're running on. Really valuable research coming from people like CoinShares that, show you the type of energy people are using across the world in terms of whether it's renewable, reducing, flaring of gas, and specifically in North America, it's really popular. There's more opportunities for that in South America. So I guess what 2020 kind of showed me in Bitcoin mining is it really just, 2020 was like a giant spotlight on Bitcoin mining, and it really just revealed all the potential opportunities and all the different areas or avenues of growth that I think we're going to see Bitcoin mining really take off in. Some of them are in Denver Bitcoin's industry. I think we're going to see a pretty significant shift away from China completely dominating the scene. I think they'll still dominate hardware manufacturing for quite some time, but in terms of hash rate distribution, I think that'll shift a little bit. I don't see just like, all the hash rate leaving. I still think there'll be a ton in China, specifically in Sichuan. But I think that you'll see more and more larger players coming out of North America. To be honest, there's just too many things to say. It's been a wild ride in 2020, to say the least.
Let's kick it off to someone else. And you got into some predictions, and that's going to be part of the show too. Who wants to jump into lessons learned from 2020? All right, I'm going to call on Drew then. Okay, Denver. Yeah, jump in.
I was going to say, I'm prepared to, something I learned is I'm mentally preparing myself to mine very few sats per day and be ecstatic about it. I think I'm prepared to. What I learned is that really, really big and powerful forces are going to be coming and mining Bitcoin, like governments and oil and gas industry or oil and gas companies. So I really expect hash rate to go crazy over this decade. I think by the 2028 halving, it will be a struggle to mine a lot of Bitcoin nominally, but I'm prepared for that, and I fully expect price to reflect that global demand. So that's something. I'm going to mine less Bitcoin tomorrow than I am today. Is something I learned always, right?
Yeah, I think that is the sad reality. I guess the lesson for me, I guess, is kind of just like a simple one, where it's like, you really can't take advantage of these, rapid upshots in price if you don't have hash on the ground. So you kind of you either have hash on the ground or you don't. And yeah, you kind of need the infrastructure in place, and you need sort of the sales built to take advantage of these positive tailwinds.
Young, you want to jump
in as well? I think from what we're seeing, it's I think I agree with what Edward and has been saying, and also Denver. There's going to be more of larger institutional players in this mining world, and I think increasingly it'll be important to have scale, because without the scale, it's going to be difficult to mine. This very moment may not be so obvious, but let's say when things are a little bit normalized, I think with scale, there's going to be a lot more advantage in being able to do this kind of mining operation. But overall, I think Bitcoin price will it still look very, very favorable, because I simply cannot see in any way the the hash rate can catch up to the demand
in the short term.
and intermediate term.
Oh, okay, short and intermediate term. Okay,
That's
okay.
a great way to put it.
Very, very bullish then. I want to let Eddie go, but before that, is anyone here fearing of any sort of such a thing as like a minor death spiral, or even in the long term that Bitcoin's price or fees will not be able to sustain mining? Just want to like get the feel from the actual miners. No. Okay. Just yawns.
solid
Okay.
no.
Okay. So all the fudders out there. Just that's the reaction from the miners. Eddie, what's your look back?
I think Edward and Drew hit some really good points, but it's also really interesting how they contradict in a sense. So like, absolutely, mining has changed since 2017, 2018. Every year, I think it's like developed more professionally. There's more transparency now, and things are moving really fast. But also, it's a really static game, just because of just like we're dealing with physical things, right? And things are gonna move slower. So even like everything's gonna lag a little bit. So, and because of that, you know, if you have hash on the ground today, like Drew said, that's really valuable, right? And you just can't anticipate that, or rather you have to anticipate that like months in advance and just prepare for that. Shipments like the one that Core did, I think the delivery date on that is something like June of next year, right? And when you're competing with Apple for chips, it's just like, it's a non-starter, right? It's really hard to get capacity and get these machines to pump out. I think the biggest thing I learned this year is probably the change in the stakeholder models. So before it was a lot of it was like usually a guy's like, I want to mine Bitcoin, let's build a farm, we'll invest money, we'll get the machines, and invest a bunch of money in mine. It's changed in the sense that now there are more people willing to, let's say, do ASIC-backed loans, right? Or there are now multiple parties in terms of investors, in terms of counterparties that are dealing with this asset class now. So now, when you're building, on my end, I'm building a lot of my time is spent building these mining pools. These features now kind of have to sort of shift a little bit to satisfy the needs of all these new stakeholders that are now coming in that did not exist before.
That's a very good point. I think that ties back into a lot of these institutional players. They have a different set of requirements. Instead of, let's say, the old style of a mom and pop shop of mining in a smaller scale, the larger scale requires sometimes hundreds of millions of dollars of funding. And even, let's say, a good-sized family office, they may still consider funding, let's say, doing their own mining, funding that's entire farm that's too concentrated for their taste. So a lot of times it's going to be some institutions that has some natural diversification that can go into this, and there's going to be a lot more financing options in this play, from the acquisition of miners to the mining sites to everywhere in between, and also including how you manage the risk. You saw the news of the CBOE also jumping in. So I think this industry is maturing. It's getting a lot of these larger players' attention, which is a very good thing. And I think that's also part of the reason why it's going up, because this demand we cannot satisfy. And Eddie, just to your earlier point about the Moore's law is dead, it's actually not dead. It's just a little bit slower. It's getting harder and harder to jump from 7 to 5 nanometer and then jump to 3 and 2. So that means each generation of miners will have to last longer, and that's just going to be the reality.
Something
which I
I've
think.
learned, I think there's an overemphasis on just like the chips and the increasing efficiency of the machine, especially working on firmware and just like trying to optimize the hell out of the machines. You realize there's so much more room to optimize across other areas. I mean, like when you try to overclock, say something, let's use an S9 for example, and you, as many people do now, most people do, you crank it up to 1600 watts, right? Depending on the model, it'll be about like 1200 is the standard, but when you start cranking it up, the efficiency of the PSU drops to like 92%. So I think there's a ton of room for improvement in the optimization of PSUs and like how to run the machines efficiently in that way. There's ways to kind of like build in smart PSU PDUs into the farms before you actually install any machines to make the operation more efficient. And that can make your whole data center run about like, and some estimates 5 to 8% more efficiently. There needs to be better, and some people highlighted this too, like equipment financing, because there is a shortage of, I guess, a diversity of manufacturers. They're all concentrated in one place, and other people in the world want access to these machines and growing demand. So like every month that passes, we grow more and more, and it's exciting, and more people are jumping into the space. But at the same time, that just highlights like as the more often people kind of butt up against these restraints, it just highlights we have to improve a lot essentially across many different factors.
Although I think, yeah, Edward, one of the kind of nice aspects of those the other areas of optimization that you kind of discussed, whether it's like PSUs or the firmware, is that either both of those should still kind of prolong the useful life of these machines, which I think is particularly relevant from the equipment financing perspective that you mentioned. Which is, I mean, yeah, candidly, where I kind of spend most of my time thinking about. Before I got into sort of Bitcoin, I was working in traditional finance, doing sort of structured asset-backed financing, and kind of the key problem when you think about ASICs to date, and like, granted, I wasn't here for much of this history, but ASICs to date is if you have a machine that's only going to last like, call it 18 months before it's just so inefficient and it's not really competitive anymore. Again, like the S9 is an exception, but the problem is that's not really an underwritable asset, especially like if you're basically going to write a loan for a piece of like a hardware that's only useful for 12 or 18 months. It needs to be really favorable conditions to actually get paid back. So the nice thing, if you know, we do see this like slowing down of Moore's law, and people can start, you know, optimizing this hardware, you know, assuming you have attractive enough power prices, it should become much easier to get debt financing, because in addition to, like we talk about institutional capital, the real problems are people that know about Bitcoin mining and are comfortable with the risk don't really have the capital they need to like fully you know, build and scale these mining projects. And then people who do have the institutional capital, to them it's still magic internet money that until it passed all-time high yesterday, it was still like tulip bubble 2.0. And so I think as they come up the learning curve, you'll start to sort of see people taking advantage of this arbitrage, because the reality is that like the returns in mining can still be so attractive if it's the right project.
Drew, you hit on something. Eddie, Young, we've had multiple people hit on this, so I kind of want to ask a question that's a little bit from you know, a different angle. But you know, we have multiple mining companies now that are publicly traded. And with that comes access to a lot of different financial tools that even, you know, a private company doesn't have access to. You know, do you see these publicly traded mining companies as being at an advantage to other miners, being at a disadvantage, you know, because they have other things that they have to kind of deal with? What do you guys think about that? Is that a big deal?
I mean, clearly, Ride and Marathon had a huge advantage because they're able to file $200 million shelf registrations and then just start, you know, I'm not very familiar with who their sort of shareholder base is, but they seem to be raising more money or as much money as anyone right now. So I think clearly they're taking advantage of sort of this capital markets arbitrage between private sort of small scale investors and you know, people who are buying their equity. But
yeah, I just hope for these public market things, I just hope they set a good role model there, because if a couple of them, if they crash and burn, it's going to be bad for everybody. So hopefully, and they know what they're doing, and they, let's say have some kind of steady growth. So there's no example stories of something bad that happens. So I think this is still a very new industry. Hopefully, it does not create too many of these examples for, let's say, companies going public and things turn out sour for investors.
So I want to kind of stay on this theme, right? So we've seen MicroStrategy kind of being the first public company to issue corporate bonds in order to buy Bitcoin. It seems as though we live in a world where there's a lot of cheap debt, and Bitcoin is this ultra scarce asset. Mining Bitcoin is extremely competitive, and it kind of plays into that scarcity. Does this tie into mining at all? Does this like speculative attacks, arbing these interest rates into 5 years into the future, this kind of stuff, like how does that play into mining?
Yeah, so I'm not sure I sort of necessarily agree on the speculative attack point, but in terms of the way I see it, and I'll shut up after this because I've been talking a lot, but like the when you think about sort of the difference between interest rates in the traditional financial world right now and like traditional sort of corporate debt versus in just like the Bitcoin space, it's sort of like mind-boggling. Like the fact that Bitcoin collateralized loans are like 10%, interest yielding assets, when if the types of some of the companies I used to work for, we'd get them like 7x leverage, and they're paying like 3% on their sort of debt now, and it's like sort of a fast casual restaurant or like a quick service restaurant franchise chain paying like 3% when someone who has like is putting the scarcest asset in the history of humanity and his history of the universe up as collateral, like the perfect form of collateral, and they're paying 10%. It's the most mispriced risk in the world. And so I think that's kind of what's going to draw the institutional capital over into this space, I think, is if you have a sort of a loan backed by mining equipment that's charging between anywhere between 15 and like 25%. It's a fucking no-brainer. If you can just get comfortable with the macro risk for Bitcoin, which is becoming easier and easier to do, it's like people, institutional investors should be throwing their money at this because it's just such like a massive yield.
I completely agree with you.
Let's go.
Oh, sorry. Go ahead.
Oh, I'm done.
You just said you completely agree. Okay, Eddie then.
I actually want to ask Drew, like this is a really interesting question for me. So I absolutely agree on your points, but would you say there is a difference between like what MicroStrategy, is doing in terms of just buying a Bitcoin versus someone like Marathon who actually has to go out with the money and, purchase machines and then set them up, and then, hopefully the environment, based on the parameters that we expect doesn't change too much so that they can actually, get an ROI on that investment?
Totally. I think the biggest difference is like MicroStrategy is sort of making like just a macro investment where they basically are like short the dollar, long Bitcoin. And so they borrow a bunch of money and then they bought like 650 million of Bitcoin at spot, versus if you're Marathon, granted there are a lot more like idiosyncratic operational risks that you're subject to. But the nice thing is Bitcoin price crashes and say we don't see like 23K for another 12 months. Probably is good for mining conditions from like a Bitcoin accumulation standpoint. And so, Marathon can mine Bitcoin during a bull market, and if they hold it on their balance sheet, when Bitcoin moons, they look like geniuses. So, I mean, it's one of the reasons why I think mining is so attractive, is because you get more Bitcoins in a bear market. And if you're comfortable for the long haul and you can still fund your OpEx, then it's sort of like a risk mitigated way maybe of getting Bitcoin exposure.
I agree.
Right.
I agree that that's a risk, a way to mitigate risk and accumulate Bitcoin, over the long term at a discount, no matter the price, essentially is the idea, right? But I think that only works when you mine for next year, 2 years price, right? You don't mine for today's price, and you make sure to hold the majority of what you you earn on your balance sheet. Something that we do is, we've taken a position where we wanted to go, like 24 months without ever having to sell any Bitcoin. But I don't feel like a lot of, especially debt funded operations, are in that same boat. I think that because they're going to have, they're financing their debt, they're going to have a higher OpEx. I think there's some that are a lot unhealthier than they maybe appear. Even if the Bitcoin price is doing well, they've already sold a lot of opportunity costs in the past. So it's interesting how that'll play out. I guess with debt, they can float for a long time. And that seems to be how a lot of, public companies and stuff do that now. But yeah, that's a great point. I mean, I think it's a mitigated long-term way to accumulate Bitcoin, but it does come with some caveats as well, right?
Doesn't
There are some companies
MicroStrategy's
that have taken on. Sorry, go on.
I was just going to quickly say MicroStrategy's convertible debt note that they just wrote, I think expires
75 bips.
2026 or something like that. So it's like,
Yeah,
they've got two market cycles to go through in order for that thing to hit positive. I just can't believe
did they already,
It's a
didn't it
cheat
already
code.
appreciate? Didn't it already appreciate enough for them to pay back
Yeah, I think so, actually. I think so.
if
Or at
they
least
got it on their books?
Yeah. Crazy.
Yeah. Like they're
Go
good
ahead, Edward.
today for something they owe in 6 years.
Yeah.
Well, I mean, that's not the play though. They weren't making this bet on like a 10-day turnaround. They're making this bet on 5 years. For any Bitcoiner, that's just like, I mean, historically speaking, that's money every time. It just seems obvious.
There's never been a Bitcoin bought, held for 5 years, and wasn't profitable.
Right. That's exactly right.
All right, y'all. Unless anyone wants to keep pondering on this, I wanna start talking.
Hold on. I cut
Yeah,
Edward
yeah.
off. I want to make sure we give you a shot to say
No,
something.
it's all good. We can move on to the next one.
Do you have a thought?
I have zero thoughts.
Okay, zero thoughts. Great. Okay, so I mean, our next topic was looking forward. I feel like we talked a lot about looking forward, and I think that we're going to be making predictions in the future. I want to talk about geopolitical mining landscape. So obviously, there's a surge of hash rate coming into North America. A lot of you gentlemen are involved in that. Asia, Russia, also big players. I'm kind of curious on, the mining landscape today, the mining landscape in the near future. How are things evolving? Let's jump over. I guess let's jump over to Edward since you had the last word.
Sorry, I said a bunch of almonds in my mouth. So what's the specific question? Like just generally what I think of what's going on geopolitically?
Yeah,
with
let's
hash
just
rate?
let's just talk about the mining landscape and how it's evolving. I mean, I guess talking about geopolitical factors, it seems like the more stable the politics are, the easier it is to set up shop. But outside of that, just kind of curious about the geography.
That's true. I think more people are taking really long-term bets on Bitcoin mining in geopolitically stable areas. I think this is clear from the press releases of companies like Riot, Argo, Marathon, Core. But I think for quite some time now, I don't think they quite necessarily yet overshadow some of the Bitcoin mining bets people have been taking in less stable areas. Like Kazakhstan in the last couple of years has completely blown up in terms of Bitcoin mining. There's been data centers popping up everywhere over there. The government kind of has, said complete approval for it. You have a lot of companies based out of China, some based out of Europe, moving into Kazakhstan. That's where they get a lot of the capital to build out these facilities, because Kazakhstan generally doesn't have a huge concentration of capital to direct to this sort of industry. Russia is blowing up, right? And it seems like things could turn on a moment's notice, regulatory wise in that regard. But it seems that the Putin regime has been quite friendly towards cryptocurrency in general. The Siberia is completely blowing up with Bitcoin mining. When you look at some of the hydropowered plants over there in Bratsk, and I always butcher this. It's like Urutsk or something like that, some city out in Siberia. And I mean, even in South America, you have projects popping up in Paraguay. There's a dam that's going to house potentially 300 megawatts of electricity there. In my eyes, and from what I've seen throughout 2020, it's really kind of catching fire all over the world, whether it's a geopolitically stable place or not. And even the places where you have to mine covertly, like say Venezuela, the government's now in on it, and they want to nationalize mining pool, and they have their own. We've all seen the pictures on social media of the Venezuelan soldiers in the state official Bitcoin mining facility with all those S9s. So I think we're kind of past the point of no return on that, and I think no matter if you're a geopolitically stable region or not, Bitcoin mining is going to be a fixture if you're a place with cheap electricity or cheap energy.
Yeah, I'd like to piggyback on that, because especially the Venezuela aspect, because I think geopolitically Bitcoin is going to be leveraged as a tool for any hydrocarbon rich nation to undermine any kind of US sanctions and to bring energy to market, outside of using another country's currency. So, I mean, I think Venezuela is a great example. I read an article that was early December that they settled their trades with companies in Turkey and Iran in Bitcoin. So, I mean, effectively, Venezuela can take the oil and gas that they have as a natural resource, sell it to the Bitcoin network, and trade those rewards with Turkey or Iran and settle those trades in Bitcoin. They never need to touch the US dollar, right? So sanctions are moot at that point. And I mean, the US government knows this, and the way they try to bottleneck them is by going after the pools, facilitating the hash rate. But it's an immutable process. So geopolitically, I think we're in for, I mean, I think hash wars might actually be a reality between nations.
Does anyone know what Venezuela's view on Taproot is?
No idea.
It's a hilarious
So
question.
hash wars, that's interesting. I feel like kind of like nuclear weapons led to or enabled the Cold War to happen. It was still lots of hot factions of part of that Cold War. I feel like Bitcoin may be that next step where nation states can just put their energy into Bitcoin mining rather than having a hot war. I don't know if that's too far-fetched and cosmic and too far out of reality, but something I've thought about. But talking about, let's bring it back to geopolitics and the geographic distribution of mining. What is the breakdown right now in terms of geographies? Like 60% China, 8% in North America, the rest kind of distributed. Who has a good pulse on the current breakdown of hash?
I don't like to use that metric so much. I'm just going to jump in real quick before I let someone else talk.
Please, yeah.
Because traditionally people have used geography and like these arbitrary borders that nation states have drawn, 1,000 or a couple hundred years in the past to determine like who has what hash rate where. But I think you really need to follow the money, as you should do in almost every scenario. And so when you look at some of these metrics that say, maybe 65% of the hash rate is in China, when you follow the money, it's much, much, much more than that. Like Chinese hash rate doesn't stop at Chinese borders. As I said before, like a lot of the capital that goes to build these facilities in Kazakhstan, a lot of the capital that goes to build the facilities in Iran, I could go down the whole list. They're going to be at least half owned by Chinese investors. So it's probably a much higher ratio than that. And I think it's probably a little bit more useful to look at who owns the machines and who's putting up the capital as opposed to the geography of where the hash rate is located.
Well, I mean, I could definitely see in both cases, right? Because the geography kind of has to do with what jurisdiction has power over those physical machines. But on the flip side, obviously, who's making the money, who owns the investment, who's controlling that, who could be choked by a jurisdiction. It's interesting too. Based on your kind of insights, Edward, do you have any kind of guesstimation on where the percentage of hash rate is controlled, maybe from a citizen or organizational perspective?
In what sense? Like,
well, you said like saying 60% of hashes in China is not fair. What do you think is a more accurate kind of breakdown, maybe from like a citizenry perspective?
Closer to like 85% or up.
Anyone want to push against those numbers? Young, I can see your face. You want to talk?
Yeah, sorry. I don't have any specific numbers, but I think it's probably not going to be that high. And also, going forward, I expect things to be more and more normalized, because a lot of these expansions, given that earlier when I mentioned institutions and let's say a lot of U.S. investors and as well as other countries' investors, they're getting more interested, and to fund these expansions, a lot more mixture of money will be involved. So I think that's healthier for the crypto world.
I agree with Young. I think in the future that will change, but I think currently it's still around 80 to 85. I stand strongly by that guess.
So I've got a question from Amanda Fabiano, who helped put this together, low-key, and is a good mentor of mine. She asked, based on this conversation we were talking about, so say we have nation states getting into mining. Is it still competitive then for, you know, a little guy to be a miner or to be a pool? Or do nation states just completely wash out the entire competitive mining landscape when they join in?
I think it comes down to power, right? I think anybody that has the ability to invest in, you know, more or less free energy, right, and waste energy, doesn't matter what, you know, how small what they're earning is. It's still a good idea. It's still a more economic decision than wasting energy that is in excess over demand. So it's still a market that you can sell energy to above zero. But also, I mean, we don't need to ask the question as a hypothetical. Nation states are involved in mining. So yeah, I mean, it's the world we're living in today. So
yeah, I think Denver's right. Power is like a big part of that, but also I think a massive one is supply chain. I think one of the reason like China is so dominant is because like supply chain is more than just like the widgets that produce, but the people involved in that production process, and like just like the culture of like, you know, the people in China are going to get the machines first, right? Geographically, they're closer. Physically, they're closer. And when they get them first, they can make a lot more money, right? Just up right away. And that's not even, you know, thinking about customs and such. So I do think Hashrate will flow to, you know, North America and, you know, different parts of the world. But I think that will primarily be due to like intra entrepreneurs, so entrepreneurs like based in the country, you know, finding ways to innovate in mining and bring more hash rate over to their regions. I think like a lot of people, especially in the West, have like wishful thinking that like people in China want political stability, and therefore they're gonna pour a lot of money into building out farms in the US and such. But I don't think that's necessarily the case, especially this year has shown that nothing's really that stable. And you can really rely on it. And at least, you know, in China, you're dealing with someone that you know, and you know, a culture that you know, a system that you know. So I think in terms of like what I hope to see is for these supply chains to open up. So not necessarily just the chip, right? The chip can be made by TSMC, but maybe getting the chips shipped over here in the US or in Canada and getting these machines manufactured here, and you know, being able to hopefully make the supply chains in the US stronger that way.
Yeah, one point I kind of want to riff on there, Eddie, is just like the nature of the CapEx cycles, which is also like a function of chip efficiency. I think is a big reason why, yeah, there's so much hash rate in China right now. Like if it's just like a quick shipment and you're talking about a machine that'll maybe last like 18 months, you know, all that really matters is just getting that plugged in as soon as possible, and like, you know, at the expense of maybe, you know, slightly higher OpEx. But I guess if you know, if you think that Moore's law is slowing down, and if you think that like the game is changing now to longer CapEx cycles, longer term investment, then it really becomes even more so about the cheapest power in the world, as Mr. Bitcoin is saying. I think like Nick Carter's piece on this was phenomenal, where it's like if you view the world as this 3D map, kind of where the altitude is driven by power price, then Bitcoin mining is going to naturally just like flow to the places with the lowest cost of power. And so I think getting back to Amanda's question a little bit, you know, assuming every nation state's like, yeah, great, like let's like, you know, start mining Bitcoin, or let's start trying to like influence this. There are some parts of the world that just have naturally like less expensive power than others. And even in that environment, you'd still see like, say, subscale miners who are helping, you know, oil and gas producers with their flared gas. Like it's hard to beat free power. And granted, there's like different sort of infrastructure CapEx that will make it more or less scalable from like a global megawatt perspective. But it seems like, and yeah, and I guess the last thing is, but power markets are pretty idiosyncratic to like region and to sort of like country. Like the miners in China who are, who have access to really cheap power in like Sichuan, they probably, there's probably some deep personal relationships involved there, just as there are, personal relationships involved with getting access to cheap power here in the U.S. And so yeah, I feel like it's the same thing you're talking about, Eddie, before, with like this real life stickiness, because you're dealing with real infrastructure and real hard assets, that just kind of creates inefficiency and lets people have some really profitable operations.
Yeah, I definitely agree with all your points there. I think like at the end of the day, like power is the name of the game, and if you can get cheap free power, I mean nothing else matters. I think it was specifically to Amanda's questions regard to state power. I think even there you need a lot of expertise. So what I would imagine is like people, you need to work with people who understand what they're doing. I think, and the state right now, at least, I don't know, maybe there's some secret operation that they're trying to like figure out how to do Bitcoin mining really well. But, if that's not the case, like I would assume, if the US wants to get in the game, they need to partner with companies that, are already doing it, right?
This is why, like, Pierre Richard's idea of getting the U.S. government to subsidize Bitcoin mining, because I mean, the sort of the American way would not be that like the government has like a state sponsored mine. It would be like, hey, if you're mining Bitcoin, you don't pay, income tax or some other tax incentive.
Right.
Or it'd be like Quebec. Quebec mining is a shit show. Because of how much government influence has over the price of electricity.
I mean, from my point of view, it makes me think, at some point I could get some kind of a subsidization because I'm helping to reduce the emissions from an oil and gas well, right? So I think there's an argument there to be had, but I think there's also government incentives when it comes to remote power production. So, power generation companies building massive engines that are going to help lower electricity costs in a town that's nearby this well can also get certain kinds of, subsidized benefits or tax incentives. So yeah, I mean, I think Bitcoin mining is going to seep in through all of those possibilities, because again, it's just about shaving that overall operational cost, that energy cost, and finding a return. So that's a really great point. It's going to kind of bleed through all of it.
I guess, though, to play devil's advocate a little bit, governments have budgets that aren't profitable. I mean, these are just budgets that they spend, right? And so, how much would a government budget, how much would they spend? How much money would they lose on mining Bitcoin just to mine Bitcoin, right? Like, they don't have to be profitable and they can own the power. Does that end up just washing out miners at any point?
Well, think about money launderers as well. What about people that are okay spending $1 to get 92 cents? Right? I mean, even if you have free power, it's hard to compete with those guys. And you're right. I mean, at some point they're going to be able to just, they own the nation state. They can find the hydrocarbons that exist, bring them to market, and it doesn't matter what it costs. It's, they'll do it.
But I somehow feel the conversation maybe has gone a little bit too far into nation states. From what I see, it's much more of a free enterprise. It's the market force that's driving these. And, I admit we probably don't know if, the extent of the nation state's involvement, but even when they do get involved, absent of, let's say, nations such as Venezuela, there is no other option. This is their choice. This is their only choice. But usually there's still at least some level of consideration of why. If you keep on bleeding money, there is not a good reason to do this kind of thing. So I see mostly still the enterprise type of operation, less of a nation state.
So that's actually, well, go for it.
Oh, I was just gonna say, yeah, because like as he highlighted, when you look at nations like Iran and Venezuela, what option do they have? And when you start talking about, the U.S. federal government investing in Bitcoin, like what incentive do they have to do that? The U.S. dollar is the global, reserve currency. They have all the power they could possibly want. it just doesn't really make sense for them to dive headfirst into something like this. The state actors we see participating in it are, the first natural actors that would, because again, they don't have a choice. And I think it'll be that way for quite some time. I mean, even right there's that stuff going around where you just look at what Steve Mnuchin is saying, or like some of these more experienced fund managers in the U.S. And I think it was on CNBC or something like that. They had a gentleman, last name of, I think it was Rosenblum on, and he was still saying like, we don't even know what the supply is. They say it's 21 million, but we don't know if that's the real cap and things like that. Just the knowledge gap for these traditional investors, even in free enterprise, to get into it is still massive. And then to take that mental leap to say, oh, state actors like the United States are going to start subsidizing it, I think at this point in time is a little ridiculous. But I think the incentives are clear for people like Venezuela and Iran. So it's basically just an echo of what Yong said.
So I want to jump in really briefly here. In terms of like nation states versus the capital, are capitalist corporations kind of getting involved? Like I think it is totally led by corporations, and nation states are purely reactionary. But beyond that, a Bitcoin thinker and OG, Jun Seth, is famously known to say that Bitcoin miners are pirates and they're here to just feed off of government subsidies, power subsidies. Anywhere that there's power subsidies, Bitcoin miners are essentially arbing that, right? So you can see where there's this like kind of macro game where eventually, if Bitcoin becomes large enough and Bitcoin mining becomes significant enough, that it itself becomes kind of a constraint on subsidies on energy and production and stuff like that from governments. It's like this, like it's almost like this like thing that's holding them down to reality on a global level. Anyone have like a thought on like just the long game of mining and maybe what that could mean from like what different entities can do?
Well, you're talking about mining as like a subsidy sink, where anywhere there's like power subsidies, and arguably you could even say that's the case in like America, where renewables having just benefited from like a lower cost of capital have grown and like proliferated in the U.S., and mining has sort of emerged in some places to take advantage of that more like indirect subsidy on cheap power. But I mean, I think Denver Bitcoin was alluding to this earlier. Like the long run steady state of this is that mining just sort of saturates energy production, and it just like it becomes we haven't really seen like an efficient sort of allocation of hash rate, I feel like. But the long like run is that anywhere with like cheap power doesn't have cheap power anymore, because mining has arbed that out unless there's regulatory hurdles.
Yeah, I think it's a global electricity arbitrage, right? It's because this is an emerging energy demand market. This is an energy consumption market. The first one that's kind of a direct to consumer energy demand market. You can sell electricity right to this thing and don't have to deal with anybody. So that's definitely going to impact the infrastructure that we currently have, the current electricity rates that are all over. It's going to be kind of this blanket that forces everything to be more honestly priced, right? Because it's if it's not honestly priced, there's always the potential to take advantage by selling it, taking power from here and selling it to the secondary, this other market. So yeah, it's really long term. I think it's the global energy arbitrage. It's something that keeps the energy industry honest, or electricity prices honest in a way.
One just last quick comment to take it a step further is I actually think that is sort of that is an inevitable step. But I think beyond that, you also I think Bitcoin mining could actually incentivize new generation and like incentivize better forms of energy production.
Well, yeah,
I think is like where it goes long term. But
that's what I was speaking about earlier is people are now more incentivized to build engines that are more efficiently using a waste hydrocarbon to generate electricity, because they know that they have a market they can bring that electricity to, even if they were primarily going to sell it to an emerging town. Okay, they can still sell it to them, but any excess energy they have, right? They can guarantee full demand at full capacity, and that just makes everyone's ROI better. It makes, you know, the risk profile more tolerable. It's going to push the world forward that way. Yeah.
Right. I agree. I think Bitcoin mining is actually it serves a very useful purpose. Number one, it's if you look at the energy, the grid stability. A lot of times, let's say if you have a windy and a sunny day, you can have a lot of excess capacity, power capacity, and then the problem. It's actually bigger than a lot of people think. It's having this extra power. It's very difficult for the power companies. So having the mining farms that can turn essentially instant on or off, and even if they're running on a steady state, they can adjust the level of power that's used. And this type of predictability, it's helpful. And there's another very, I guess, a big benefit is I think this will encourage a lot of the new generation for renewables. One of the biggest problem for solar and wind farms is that between the time of setting up the farm to the actual uptake by other stable consumers, the problem is that year, 9 months or year and a half, that can be deadly for most of these renewable farms. And the good solution is at any moment these farms want to get started. For the first year and a half, you can have the mining farm making the balance sheet work. So that actually will attract a lot more financing. And I think this is going to be a lot of benefits that's been brought in by the mining farms.
Beautifully said. Yeah.
I think everyone touched on it, but like Bitcoin is like a battery for energy. It's like a time machine. You can kind of store this value somewhere through Hashrate and then convert it and go to the future and later, spend it on something else. And I think, a lot of people say, one of the biggest distractors of Bitcoin is that it wastes energy. But it really does the opposite. And I think it's going to, cause an energy revolution, or it already is in many ways. I mean, Denver Bitcoin's working on that right now.
We're going to be vilified. I mean, we will be vilified by some, right? Especially those who think that it's boiling the oceans or whatever. I mean, I fully expect to be told I'm like causing hurricanes and killing people by mining Bitcoin, because that's how some of the world works. But I don't know. I hope that there will be more people who take the time to fully listen to the argument, right? To the aspects of why this is more like a battery than it is just this wasteful use of energy. So
it's not going to be people needing to listen. It's you will go broke unless you do it. Every energy facility that is creating energy and not mining Bitcoin in order to stabilize their income will be competitively at a disadvantage. So they're going to have no choice, and reality will kind of bend them to what Bitcoin is bringing.
Right.
And I think you're right.
I think as the general public gets more knowledgeable about how mining works and the benefits, I think this will play in our favor.
I would like to jump in real quick and just echo what Denver Bitcoin's saying. And we always talk about Bitcoin as a store of value. Bitcoin is a store of energy too. I mean, we have to kind of metacognitively redefine what it means to be a battery. Everyone learns that a battery is like a little AA Duracell kind of thing, right? But really, in chemical engineering, you learn that like you can have a battery where you just pump water up a hill and you just like store potential energy. And so, we kind of have reoriented our society in a way that, everything is fleeting energy. Nothing can be stored. Like you have to consume, go, right? And Bitcoin, we talk a lot about how it, changes your orientation in terms of a financial setting, but also from an energy standpoint setting. Being able to convert energy into Bitcoin, I think is just like one of those paradigms that, we haven't really nailed the conversation yet with the mainstream to explain, that Bitcoin's not a waste of energy. Bitcoin is storing energy. And so yeah, I just wanted to echo what you were saying. And I agree.
That really kills me when people say Bitcoin mining like wastes energy. It hurts. It's probably my biggest trigger. It sets me off so much.
Take a picture of their Christmas lights. This is a great time of year to just
Oh.
give evidence on how much energy they're wasting.
Just, I mean, look at Call of Duty and Fortnite. I mean, for God's sakes, the amount of energy that,
Good point.
freaking 35 million Xboxes uses.
Although one thing I do just want to say, like, as much as I totally, yeah, I mean, fuck, I'm bullish on Bitcoin, I'm bullish on Bitcoin mining. I think Bitcoin mining is good for energy markets, and I think we need to produce more energy to advance as a civilization, as a species. Like, I'm with you guys. The one thing I will say is that as much as we like to say that like Bitcoin is like a battery, the reality is in like having a Bitcoin doesn't necessarily get you more generation when it's like 4 p.m. on like an August Thursday, right? In like the middle of the summer when it's hot as hell. Like it's indirectly, it could be some sort of battery, and that it enables you to buy other generation to sort of like pull it into where there's demand. But like the real, just to put a fine point on like why Bitcoin mining is like a battery, it's more that you are providing demand during normal hours that you could then let go and sort of effectively create more generation by just like being less of a sort of a burden as a load on the grid. But I do just want to say like Bitcoin itself is not really a battery. Like you still need some electrons and you still need some current.
It's much more of
a brand are just like this is their video application for layer one. They're getting a little excited.
This is it's much more like a consumption market than it is a battery, but it directly competes with a battery, right? So I mean, like
energy buyer of last resort.
Well, I actually, if I can jump in and disagree, I think like we're saying, I want to redefine what a battery is. I mean, money is supposed to be an organizing tool for society, right? If you can store value into your money, just like you can store, electricity in a battery, how you redistribute that energy, it can change phase. And instead of being electricity battery, you now can get people to act in a coordinated effort through Bitcoin, through spinning Bitcoin.
Totally. And like, Sailor was talking about this on the Breed Love pod, like, money as energy, and like totally with you for that sort of like broader, more abstract conception of what a battery is. But like, let's also just be real that like a Duracell is bought and sold because it creates because you can use it to create useful current. And like,
we all just agree that it's like a metaphor or like a good analogy, but not like literally.
Well, but hey, but to some degree, right? If you're producing excess energy, you can't store it. Bitcoin is physically a way to offload it.
It's a way to bring it to market, right? I mean, it's a way to sell it in a way, right? You're selling it to the Bitcoin.
But so then it's a sink, not a battery.
All right, let's let Yang jump in. I see him wanting to speak.
Yeah, I agree. It is a bit more abstract compared to, let's say, the traditional definition of battery. But I do think you can draw a lot of parallels. If you, a lot of people, when they have excess power, they pump the water upstream to the dam or to heat up molten salt so that the heat stays so they can use it later to generate more electricity. If you think of this way, as if you store this as money, and that is also a way to allow you to later on generate something. And I think that in almost every way, it is very real of a battery, although more abstract. And the only thing I'd see that potentially it's it's probably a better option for storing energy. That may be hydrogen, but that's a different topic.
Yes.
I was told by a loyal fan that I should ask Eddie about space mining.
Oh dear, was that Ethan?
I think it's H. Not sure who that is.
In what context? I brought it up one time and now everyone makes fun of me for it.
Well, Drew from Unchained Capital is all about the center of hash moving to space. I mean, I could see a world where maybe, it's still very much like orbiting the sun or the Earth like a satellite, but you have some sort of crazy solar collection scheme that's also mining and beaming back Bitcoins.
Right. I mean, I mean, the kind of core context behind that comment when I said space mining was more, I mean, if you look at just the world as it is without going to space, the energy arbitrage is already real with Bitcoin, right? Like in terms of when we talk about it in the context of battery or whatever, when you're dealing with electricity, you're dealing with the advantages, but also the disadvantages of being in the physical realm. Meaning like, if I try to move electricity from, let's say, Canada, where it's really cheap, to China, like how do you do that? Right? There's efficiency losses along the way, and it's really difficult to deliver. With hash rate, you're talking about packets, right? You're talking about bits of data that can be sent over fiber and milliseconds, and it's across the world. So in some sense, it allows us to achieve a type of energy revolution. Now, space mining is kind of out there, but in many ways, it allows us to transport electricity over space and time into this thing called Bitcoin, which then we can, theoretically use for something else.
Yeah, and
can I ask some follow-up questions? So how when you say like space mining would be as a way to sort of facilitate the arbitrage of like cheap power to different parts of the world effectively. So how I mean, if say you have a satellite with some like S9s plugged in, like presumably you still need to get like the useful current up to those
No.
S9s. So how is like the power getting up there unless you just have like a solar panel outfitted satellite?
So that's the key difference between like kind of what I think we're going to see a difference in the hardware that's being produced, I think. So I don't understand why everyone is still in this like mental model and producing like these like boxes that
Shoe
mine.
boxes, yeah.
Yeah, and I do think that should change. I don't know like if when that will happen, but in terms of just like moving these boxes around, like if you're not going to be throwing them out in 18 months, the way that you can approach building these chips can be a lot different. Again, not going to space, but like even with these data centers, right? You don't see like computers in data centers are very different than like home PCs and gaming PCs, right? They're not like they're boxes still, but they're like differently designed. They go into racks and whatnot. And I think a similar model should approach. I mean, I know Bitmain is already working on some of those right now, but that's essentially what space mining, if it did occur, would look like. It would be much more proprietary to the specific use case.
Yeah, and
I
I
want
mean,
to be part of Eddie's space though. That's what I want.
wouldn't you just strap a solar panel to it and send it in orbit around the sun? Don't orbit around the Earth, just lock it on the sun, and then you got constant electricity, right?
Well, but then you get to the same center of hash point that Drew was talking about, where like latency potentially becomes an issue. But I guess that's what I'm a little confused by, Eddie. Is like, so you're basically just talking about like solar panel outfitted mining rig of a different form factor probably, but like in space. But that's just
yeah. In
I
truth,
think
the
concept completely works.
Bitcoin's going to be in the oil field way before it's in space.
Right.
Agreed.
I think the concept of space mining that works, but I think it works better in a novel, at least for the meaningful time frame. Because if you were to try to think through the practical aspects of it and the cost of launching all these things and the size of the solar panel in order to generate that kind of power and the weight of equipment that you have to ship up. So if you quickly think through all those, it's not in our meaningful time frame.
No, it's 120-year ROI. It's no big deal.
That's what Bitcoin does, though.
Yeah.
Long-term thinking.
We just need Bitcoin to go to 30 million a coin in the next century, and we'll be fine on these satellites.
When extraterrestrial pirates hijack our Bitcoin mining satellites, then we'll be in trouble. What's your answer to that, Eddie?
Yeah, I think like in the context of the conversation, if I remember correctly, I was more speaking in the context of physical resources as well, so actual mining, because there's a lot of rare resources up in space, and specifically I'm looking at gold, right? And if they're able to extract those resources, that would also disrupt the Bitcoin ecosystem quite a bit.
I'm not mining all the asteroids.
I'm not so convinced on shipping commodities back. I think that shipping data, that makes a lot of sense, but shipping commodities back, that seems like it's like shipping gold back down. That gold's gonna be way more expensive than gold coming out of the earth.
For now, right? We
Probably
didn't have
for a long
reusable
time.
rockets a few years ago.
I think
Yeah.
it all depends. If you got a big asteroid that's essentially a golden nugget, and it's worth it to bring it back.
Except
This
you're
is why-
destroying the market.
Well, this is
Right,
why
yeah.
we Bitcoin, CK, so that we can.
So
Sorry.
what happens first? Bringing gold down to Earth or mining in space? Bitcoin mining in space.
Think mining in space, because gold won't be a store of value in the next like 20 years of any like meaningful amount, that there'd be no reason to go mine asteroids. So I think,
guys-
and I don't think we're not going to be throwing satellites in space with the mining rigs, but I think, we all working here towards like creating a Dyson sphere around the sun to just mine Bitcoin. So
Mining in space is already a reality, right? Has no one ever heard about this?
Yeah.
Does anyone know the company I'm thinking of?
Nope.
Is it the one backed by consensus?
Is it the what?
There was I think there's a space
Blockstream got a
mining
miner up there.
No, it's a
South
better
African base,
Bitcoin.
right?
It's more secure. You can reverse the transactions, so they say.
Is it Space Chain?
No, it's
I'm not
a
against
company
it.
that mines Bitcoin Vault.
Oh.
Yeah, I don't even know what that is.
All right. Next subject. So, from a hash rate perspective, where are we these days? Like 130 something exahash? Yeah. Like, what's the hash rate prediction for 2021? And I know that that's a more nuanced answer than it appears, just because supply chains and all this kind of stuff that we've already been talking about. Anyone? I mean, again, anyone want to jump into this? I don't want to throw
Well,
someone. Yeah. Okay.
I wrote
Denver.
an article. I wrote an article for you guys for Bitcoin Magazine that's coming out. So I think I predicted 275 exahashes by end of 2021. I expected a doubling in the hash rate.
And you think the new production, like the new ASICs, can bring that kind of hash rate?
I just think price is going to bring the hash rate.
People will figure it out to get the prize. It's juicy. Next.
But I mean, 2x seems reasonable. I think it was like this is just from memory, but like I think it was like 4x from like 2018 to 19, and then last year I think we saw like around 2x. So I would assume the same given like the supply constraints. So you said 270. I like 240, like a little bit lower than that, just because I think these supply constraints are really real right now. And we'll see what happens, but yeah.
I mean, how much does COVID play into your prediction?
Doesn't really. I don't think, honestly, I don't think COVID has affected things that much supply chain wise, and people can correct me on that if I'm not right. I think a lot more has to do with like chip allocation, people figuring out like they're spinning up factories in different parts of China. There's also like customs issues. There's just a lot of friction when you deal with like you're not dealing with theoreticals. And that friction plays in, with how much hash rate can be on the network.
All right, so just a quick update.
We'll do 241.
Wait, so say that one more time. I'm sorry, I was talking.
I'm saying if it's Price is Right rules, I'm going to do 241 exahash.
Well, how long?
Yeah, come on, let's make something more interesting.
How long until we talk about zeta hashes, right? I mean, how long will it be before the next halving that we reach the next, marker, and exahashes is a thing of the past? Because I mean, we got to 1 exahash right about like end of 2015, 2016 area. And then within, another 4 years, we're at 150 exahashes. I don't know. I think we might not be in the exahash range for very long.
Yeah, I think it's going to depend on like how effectively you guys are able to build out your capacity. Because like if you think about it, the biggest forcing function against the rise in hash rate is that eventually it's not cost effective to mine with these older machines anymore. But if you guys are able to get power essentially for free, then as those kinds of companies build it out, then it'll basically all the old machines hopefully will come back alive, like the S9 has recently.
Well, it's not even free energy. It's like it's a profit that was not even available. Like it's unlocking profit-making opportunities that weren't there.
Right.
So, if anything,
well, it's cost savings to some degree too. So yeah, but beyond that, I think you're right that the scaling the power aspect is a little bit of an issue because of power generation, right? Especially if your power is free, if you have a primary source of energy that's costing someone money, it's power generation is, there's not enough generators on Earth to consume the amount of natural gas that's wasted, right? It's, even if you wanted to, you couldn't. But I think the other side is hardware, right? Obviously, even if every single ASIC that's ever been produced was plugged in right now, where would we be? So, barring that, there's actually a supply. I think we're going to be just swimming in demand of people wanting to start hashing Bitcoin.
Yeah, I do feel like the constraint is definitely on the hardware side. I think if every Bitcoin mining project that I feel like I've heard trying to raise money over the last 12 months got the money they needed, you could probably like double the sort of the network power capacity in like from a gigawatt perspective. So I feel like if you doubling hash rate, I feel like kind of feels right by this time next year. If you assume like a 4x on that, then we're already there. We're already out of X hash land. So it seems like by next halving, very plausible.
Does anyone want to undercut by next halving when we get to Zeta hash?
All right, we need predictions from Edward and Young on the hash rate, either on the Zeta hash prediction or the next year's top.
I'll do 241.
I'll take 238.
230. Oh, gosh, I gotta say you gotta at least like go up or down by 50 exahash, but
my view, it's probably going to grow up by 50% from the current level, which if you count that, it's just over 200.
So why so conservative?
Because of there's simply not enough capacity, and right now it also does not seem to make sense at all to create any kind of Bitcoin machines using older technologies, because you have that risk. So I think, as Eddie mentioned earlier, anytime when you have the fluctuation in price, you can quickly get to a point where your current power cost is just simply too much. You have to shut down the less efficient machines. So if you were to put in that investment into older machines, there is that risk. So pretty much you can count on, for all Bitcoin mining machines, it will have to be the latest and the greatest generations, at least for new machines. So I think if that's the case, there's just not going to be enough capacity. I don't see any other way around it.
Do you guys see other foundries coming into the game aside from like
Not
TSMC?
a meaningful time frame. So right now there's only Samsung and TSMC. I don't believe anyone else. There are foundries that are, for example, Intel is talking about building new foundries in US, but none of these will get into to a point where they have a competitive advanced process and having that the capacity in a meaningful time frame. I mean, for Bitcoin, if you can't have anything within the 2 years, I think that's the prediction doesn't make much sense within the beyond 2 years.
Well, I mean, what about an abundance of free power? Because I always, just from what I'm doing, I always come back to the fact that in North America, I mean, currently the amount of natural gas that's wasted could power the Bitcoin network about 3 or 4 times over, just in North America, right? So, I mean, I think that any ASIC you plug in to those machines is pretty much okay, right? The ROI on it might not be very great, but they're also really cheap. So, but there are some other infrastructure costs that you have to recoup. So, I see S9s in the oil field are fine, right? They're certainly profitable. I feel that people are going to seek out the power source maybe more vigorously than they seek out the latest and greatest hardware. Maybe I'm wrong. Maybe grid mining is going to still thrive as prices go up. I'm not sure about that, but does that change your mind, or does that at least give you something else to think about?
No, I think
you
actually
were
you
talking
have a very
about
good
12
point. I agree that anytime if you can get free or nearly free power then that completely changes the equation. Just by the law of economics, you can just, anything that you can use to mine is profitable. It's just, then your only decision is really your various mining options, which machines you should get to be more profitable more quickly. But as you mentioned earlier, there's always a cost somewhere. So you have a lot of unused natural gas, but to turn that into power, you have to have that extra generation capacity. You have to have the infrastructure, the equipment, the housing to house these mining machines. So all these things will have some cost. So I think you do have the advantage if you can scale using these excess energy, then that's great. And even if it won't be free, it will be lower cost than most. If that's the case, I think then you have a winning formula. I'm not an expert on that side. My general assumption, please correct me if I'm wrong, is that if you have by almost by definition of the excess power, it sort of means you have to have a limit. So it's otherwise the power generation, the entire and that side of the economy doesn't work. So so if the excess energy is only a small percentage of the overall power generated, then that means it's limited on how much you can get.
Yeah, it's certainly, obviously, yeah, it's limited. It's, it's hydrocarbons, and, oftentimes these producing assets deplete, but, it's also often the case that these wells are flaring enough gas to maintain megawatts. And that's just, kind of the nature. There's just way too much natural gas. It's just not expensive enough to bring it to market, right? To build some massive infrastructure like a pipeline. So this is just kind of that perfect middle ground where this infrastructure cost is tolerable because this gas is actually costing them money, right? There's guys, I wish Marty Bent had jumped in, because I know that there's producers in the Bakken that have issues where they actually have to stop producing oil because they've flared too much gas for the month. So, the cost of doing business, natural gas can be a huge hindrance for them, and removing that problem is beautiful, right? So they'll even, pay you to solve their gas problem. They'll pay you to mine Bitcoin. So I think that there's going to be a lot of people jumping on those kinds of opportunities, and I that's why I think older generation miners will still have a life as long as they still function, right? And guys on the grid are going to have a harder time competing. They're going to be in line to get the next gen miners every time.
Yeah, I think if you have a reliable, predictable source of power at extremely cheap, we should talk.
Then we should talk. Yeah.
All right. Conversation's getting set up here on Bitcoin Magazine Happy Hour. Let's go. So awesome. So guys, we're getting towards kind of the last 10-ish minutes of the show. I want to make sure that we're kind of getting through all of the topics that we have for the show. CK, we've got, I'm pulling it up right now. I think we have one more question
have it here.
to ask.
Yeah. Well, so this is a little more out there, and again, I feel like I'm putting you guys on the spot a lot here, but want to talk about bullish and bearish headlines for mining in 2021. And maybe from the bullish side, it could be easy. Maybe talking about this sky high, hash rate, but it could be even more interesting to talk about like what are some bearish headlines that potentially could be coming out in 2021. I see one as like countries want to clamp down on mining pools and put more regulations on mining pools. I could see there's banning of mining, making subsidy exceptions against mining, singling out miners. So, I mean, there's definitely in this beautiful dream of 2021 bull market, I could definitely see some negative things happening for mining. What are some headlines you guys can kind of foresee happening in the next year?
Bullish or bearish?
Bullish or bearish or both?
Well, I'll say this. I mean, it's tough for me to think of a bearish one, but you spoke toward the nationalization of mining pools or mining pool regulation. I'd love to hear from Edward what you think about that. Being operating with slush, and what would your guys' response be? How would that work? How impactful would it be? I'd love to hear your take on that.
Yeah, sure. And in terms of bullish, I think it would just be more public companies converting their balance sheets and like buying into BTC, as we see on like almost a daily basis now or weekly basis. But in response to like nationalization of a mining pool, I guess my initial response, my gut response would be, I don't know exactly how you would enforce that. At least on a minute level. Maybe with like much larger operations, it would be easier to enforce because you would know where those are and like how many machines they have and things like that. But I feel like on a smaller scale, it'd be much more difficult to enforce. I mean, everyone's kind of building off this topic because of the news coming out of Venezuela with their kind of nationalized mining pool. But the fact of the matter is, no one's using a nationalized mining pool in Venezuela. There's multiple pools. And many Venezuelans use Chinese pools, and there's not an issue. A lot of people are mining from their basements even into different pools. I'm not sure how they would regulate each one of those. I think Stratum v2 can somewhat help address this, and that even if a nation state does declare, okay, you have to use their own nationalized mining pool, it would be one, as I said before, difficult to enforce it, but you can sort of spawn. I mean, it's open source code, right? You can spawn up your own mining pool if you just put in a little time and effort, and it's really difficult to kind of clamp down on it in totality. So I think to really enforce something like you have to use our pool in the nation state you mine in, it would be the equivalent of saying, you can't download movies from the Pirate Bay, or you can't.
Right. Well, what about even more so regulators trying to bully mining pool companies like Slush, right? Of saying, hey, we want your customer data, we want the IP addresses that have gone to accounts and things like that. What about that kind of possibility? Rather than just the, hey, you have to use our pool, but more so reaching out, trying to even retroactively grab data.
So I think they could potentially move against existing pools in that manner. I mean, especially considering that the vast majority of the hash rate is being directed towards Chinese mining pools in China. I think they could easily do that, and then really any nation state could do that. But I would just think that other quote unquote pirate mining pools would pose. I know some companies are making their own private mining pools and only mining themselves to it and having chosen selected partners. So, I mean, to be honest, I don't really know what would happen if that were to become a reality tomorrow. But it's not something I'm really too concerned about.
Bullish or bearish headlines?
Yeah, I guess I'll throw some bullish ones out. Yeah, I think at least in North America, you'll start to see some like major big name institutional investors start to invest in Bitcoin mining. Just like we've now seen, MicroStrategy, Square, and all these institutional investors have now made like either investing in Bitcoin sort of no longer a fireable offense, or holding Bitcoin on balance sheet as a treasury asset is no longer a fireable offense. I think you'll start to see, the idea of like a major institutional investor with billions of dollars in AUM considering investing in Bitcoin mining will no longer be a fireable offense. And I think that's like it's a pretty important step to get over for the industry.
Yeah, I agree. I think a lot more of these, it's going a lot more mainstream. Recognizable names will show up in support of Bitcoin, either from buying or funding in some ways. So I think that's going to be driving the demand side. well, actually also supply side.
One other thing I'll add just on that pool point. Sorry, it's like 3 a.m. over here. I'm like a bottle of wine, a couple beers
What
deep.
beer?
You're a trooper.
You're a trooper, man. You're a soldier.
Yeah. I think a good example of like what would happen if a state seized or tried to like control a pool. I think we can use OKX. Mining pool is a good example of what could potentially happen. Is that unless it was a simultaneous attack with all nation states at the same time, Hashrate would just switch pools. I mean, after OKX announced that they were freezing withdrawals from their exchange because the guy that held the private keys, Shoestar, was in custody, almost instantaneously, all that Hashrate moved to other mining pools. So I think it would be exceptionally difficult for any nation state to kind of affect Bitcoin mining in any serious way in that manner.
That's good for Bitcoin.
Yeah, that's very bullish. I love hearing miners say bullish things about Bitcoin, like states can't affect it, and the subsidy will never run out, things like that. I love that.
We're the perma bulls, man. Like you don't start mining Bitcoin unless you have some serious conviction.
All right, I think if anyone has any more headlines they want to shout out,
Eddie.
this is your chance.
I'll throw a bullish one out there. I'd love to see some new article that says Stratum V2 added to all Bitmain firmware by default, or something like Luxor. We've wanted to implement Stratum V2 forever, but at the end of the day, you start to realize that it's not about the pools. It's really about like the firmware at the end of the day, and they have to be the ones to push that technology ahead. There's obviously a lot of benefits you guys all know about with Stratum V2, and we'd love to see that in play. So hopefully next year.
I'll throw one out too.
The V1, so hopefully they'll see the benefits with V2, and we have some exciting news coming out about that soon. So stay tuned.
A bullish headline, might you say?
A bullish headline. Yeah, I'll throw one out. I think, seeing a headline that talks about X, Y, or Z big oil company getting in, looking to invest in mitigating their waste energy by mining Bitcoin. Equinor happened earlier this year, which is they're a massive player. That really woke the industry up and made a lot of meetings happen and phone calls occur. But I think we'll see maybe one that's even a more recognizable oil and gas, energy producer name. So that's certainly one I'd throw out for the next 12 months.
Love that. Bitcoin mining and energy, they just go hand in hand. They go hand in hand.
Harmonious.
Very, very awesome. All right, guys, I think it's a good time to transition over to last word. So this is your chance to, say whatever you want to say to the audience, as well as plug where people can find you and learn more about you and your specific project. Let's jump over to Edward. Let's relieve you from having to use your brain any longer. And thank you very much for staying up late and chatting with us.
Yeah, no worries. It was a pleasure. Last words. In terms of places to find me, on Telegram is pretty much where I live. It's at Evenson, my last name, 91. And then on Twitter, it's willhash4coins. I'm usually off on some rant about firmware or mining there or making fun of our friends over at Luxor. And I receive my own fair share of abuse from them as well. So yeah, that's about it. I just thank you, Christian, and the BTC, or I should say Bitcoin Magazine team, for inviting us on, and it's been great. Hope to see you guys more in the future.
Cheers. Let's jump over to Drew. What's your last word?
Grateful for Bitcoin. Looks like we're going to the moon soon. You can find me on Twitter at BTC_Buddhist. And then I'm sure you'll be hearing some announcements from us, and I work with Amanda Fabiano and AJ Scalia over at Galaxy on the mining team. So feeling pretty bullish.
Let's go. All right, Denver, what's your last word?
Stoic.
Catch that?
I just say, well, thanks for having me here. My internet's kind of acting up right now, but you can find me at Denver. Can you hear me now?
Yes.
Sorry, guys. But you can find me at Denver Bitcoin. My last word would be keep an eye on the oil and gas industry. I think it's going to power Bitcoin.
All right, let's go over to Yang, then Eddie, and then Brand. You can close us out.
Yeah, thanks for inviting me. I think I'm feeling pretty bullish about Bitcoin. I think we're probably looking good for multiple X from here. Thanks.
Let's go.
I'll keep it short. You can find me on Eddie plus Wang on Twitter. And then for Luxor, it's mining.luxor.tech. Yeah, feeling bullish. Honestly, less euphoric than everyone else. I wish Bitcoin would stay at 10K for a bit longer so I can accumulate a bit more. But it's okay.
Just half the sats. That you just have to accept that. Accumulate
Exactly.
here. Brand,
Exactly.
close us out, man.
Well, guys, this was an incredible conversation. Really enjoyed the insight everyone brought. I learned so much. If I could leave everyone with one thought, it would I would leave it two thoughts. One is don't discount mining in space. All right, I love this conversation, and this is the kind of stuff that lets me just geek out with everyone in the office about. So no, fully bullish on mining in space. And then the other thing I would say is, Bitcoin's a battery. All right. So, it stores energy and redistributes society accordingly. So I'm going to come out hot with my final two words, and I'll say buy Bitcoin, and catch me on Twitter at BrandBTC.
All right, cool. And with that, you want to roll the commercial?
Let's roll it.
Love it, Brand. Amazing.
Okay, that's a real last word there. All right.